Unity just posted a very strong quarter. But the more interesting part is the earnings call. 8 top-tier Wall Street analysts asked questions, one after another. I'm going to walk you through every question they asked and how management answered. You'll see what the smart money is actually testing. First up, Morgan Stanley. He asked, the flywheel you keep talking about, between the vector ad engine and the create engine business, how does it actually connect? And that new runtime data you just plugged in this quarter, how much of Vector's growth did it contribute? Management answered, runtime only got connected at the end of the quarter, so they can't attribute it separately yet. But the flywheel logic is this. More games drive more platform usage. More usage means players need more content discovery, and that feeds the ad business. Read the question this way. He doesn't want the result. He wants the mechanism. He's trying to confirm this thing genuinely self-reinforces rather than being a nice-sounding story. Next, BTIG, with the sharpest question. He said, Vector's sequential growth was 23% this quarter, and you're guiding just 20% next quarter. Is it starting to decelerate? Management answered, they shipped more than 20 product improvements this quarter, and they can't keep that pace every single quarter. But growth rests on 3 legs: product iteration, data quality, and model tuning, all self-reinforcing. Runtime, they added, is a long-term mode. This is the classic analyst move, watching the acceleration of growth. It's not whether you're growing, it's whether the acceleration is still there, because that's what drives the valuation. Third, Bank of America. He asked about penetration. How much of the advertiser base is still untapped? Is this growth coming from new customers or existing ones spending more? Management was candid. Most advertisers in gaming already spend with Unity. This growth isn't from signing new logos. It's from testing and scaling existing customers' spend, one game at a time. Competitors see the returns and come on their own. That answer cuts both ways. The upside, the growth is solid. The catch, optimizing your existing base always has a ceiling. Fourth, Goldman Sachs. He went after profit. After you divest those businesses, what are the long-term incremental margins? How do you balance growth against investment? Management gave a hard number. Gross margin of 82 to 83%, expanding roughly 200 basis points every quarter since the first quarter of last year, and next quarter EBITDA margin expands another 400 basis points. What Goldman wants is the word structural, proof that the margin improvement comes from the model, not from one-time cost cutting. Fifth, Cannonball. He asked about the next-generation engine, Unity 7. What makes it different? Management said Unity 7 is a complete re-architecture, letting developers and AI coding agents build games together, and it's backward compatible, so old Unity 6 code just runs. Faster rendering, live editing, letting people make deeper, more beautiful games, rather than replacing them. What he's really asking about is Unity's second growth curve. Beyond advertising, can the engine itself tell a new story on top of AI? Sixth, City. He pushed Unity 7 toward monetization. When a coding agent calls Unity directly, will it automatically wire in advertising, payments, all those money-making tools? From day one, management said yes. And it will expand Unity's users from professional developers to tens of millions of prosumer creators. That question hits the nerve. AI isn't just about efficiency here. It directly widens the pool Unity can charge. Seventh, Wells Fargo. He asked about a new monetization point, payments and commerce. Unity launched its commerce product at the end of June, free to developers. How big is the direct-to-consumer mobile gaming market? Management's number, about 15% of the total market. Launching it free is about claiming the land first. The analyst wants to know how big that land actually is. Eighth, William Blair. At the end, he circled back to the flywheel. Within it is the part ramping now more important, or the future new stuff. Management said the 3 legs, product, data, and model, are inseparable and accelerate each other. Runtime data is only 6 to 8 weeks in, but long-term, it's a huge advantage. Notice this. 2 analysts, first and last, both asked about the flywheel. That's not a coincidence. It tells you what the whole market most wants to confirm, the durability of this machine. String all 8 questions together, and not one of them asked how much you made this quarter. They were all doing the same thing, stress testing how long and how fast the vector AI flywheel can keep spinning. This quarter, Unity gave a very strong answer. But look, the smart money is already asking about the next quarter.